Yo, what's up guys? Welcome back to the night shift. I'm back here with another video. In today's video, we're gonna cover one trade that I took yesterday. I also wanted to give you guys two tips that I've picked up over the past month in January. When I've been taking L's, I've been looking back at my chart just to see, what's causing this streak of L's, and maybe I can get out of it. So I've picked up two things that I'm adding onto the strategy, and hopefully if you guys can watch the previous video and then watch this video, then it's gonna start making sense. So let's get into it. We're looking at gold here on the 1 hour. The strategy is simple. The first rule is that you're looking for sells because you're beneath this purple line, which we are. The area that we're looking at is this area. We're looking for sells because we are beneath the purple line, and we have this huge thrust to the downside, showing that structure is broken to the downside, and we potentially could get a pullback here for us to go for another sell. The rule number 3 is that we need peak center pass. Before I get to rule number 3, with rule number 2, this downward thrust, right, I'm not particularly strict around it. What I want to add to the rule is that you actually want this correlation in these moving averages. So these are exponential moving averages. When the white one, which is the 10 exponential moving average, is beneath the yellow one, which is the 50, and that 50 is also beneath the purple one, which is the 144, then you have a perfect bearish movement, and that's what you want. It's not very strict that you have this downward movement. You can have it, it's an added plus, but if you don't have it, what you are actually looking for is, if you're looking for sells, you want the 10 EMA to be beneath the 50 EMA and the 50 EMA to be beneath the 144 EMA. That's what you're actually looking for. Alright, so that's an added extra to rule number 2. Rule number 3 is peak center pass. So we have our peak right here, we go up, we have our center right there, and then we go up, tries to make a higher high, and then we crash, and we have a pass candle right there. So our pass candle, you guys will see it happened at 11 a.m. chart time, and also you'll see that the Ellis Fisher down here is above this line, which means that our pass candle is valid. So that's rule number 3. With that said, we are ready to go to the smaller time frame to look for an entry. So I'm gonna go to the 15-minute. On the 15-minute, the pass candle would have been this one that happened at around 11 a.m. chart time. This is the pullback. So we're looking for a pullback to come and touch our 50 exponential moving average, the yellow line. What we then go do is we look down here, and then we can enter when this RSI crosses below the Ellis Fisher or crosses below the 50 level. So you can take a trade right around here on this candle. I definitely took my trade when the price hit the purple line, which is the 144 EMA. As I was backtesting, this is the second rule that I found, that whenever price touches the purple line, which is the extreme line of it all, you can directly sell on there, and you don't really have to wait for the RSI to cross beneath the green line. So I want to show you where I put my stop loss. So after I took my entry there, I put my stop loss just above at around 20 pips, and then I took my exits. I was looking at the whole low, so I was looking at this low, and I took my exits somewhere around here. So you guys will see that gold really did shoot down. So from there until there, it's around 120 pips, and that's my trade. But I just want to cover on those 2 additional rules that I just added. So what I noticed is that, so price made an upward thrust here, right? Remember that the rule said it needs to make an upward thrust, and what price did is that it then consolidated, which looked like you could have a peak center pass here, and you could go to the smaller time frame and enter and get this push up. But see how this movement came down crushing, and price didn't actually continue to the upside? The reason for that is because when this white EMA crosses above the yellow EMA, right, price is starting to consolidate. So that's signaling that there's a consolidation coming, and that price is going to be choppy and indecisive in its moves. So hence I'm saying that with this upward thrust, which is not really a strict requirement. What you do want as a strict requirement is that if you are going to look for buys here, you want this white line to be above the yellow line and then the yellow line should be above the purple line, which in this case it's not. So in this case you wouldn't take an entry. You would actually leave this and wait for something that's along these vibes. So let me show you another example. On GU, I also sought to enter on Friday. We had this downward thrust, which was the initial rule that I had, but you'll see that as price pushes up and does a peak center pass right here, price just continues to consolidate and price does not drop from here, which is what I would expect. The reason for that is because the white line has already gone above the yellow line and it's a sign that price is starting to consolidate, right? Anyway,